Hi everyone, I'm Garrett Monroe, Sell-Side Director at Calder Capital. I am joined with Mike Martin at Fiduciary Financial Advisors. Today's topic is about financial planners and financial advisors and why they are important for business owners at large, but also why are they important in the M&A process as we work with clients. So today's goal is to ask Mike a couple questions that we are usually asked. I'm sure Mike gets peppered with all the time as well, so business owners can get an idea of what they should be thinking about their business day by day, or even as they're thinking about a potential business transaction in the near term or in the long term. So Mike, the first question that we have is, how much do I need from the sale to sustain my lifestyle and meet retirement goals?
Yeah, frankly, the question that probably comes up first, right? Because you need to know what you're going to go into next. A lot of times what happens is when somebody wants to come and sell a company, there's actually questions that follow the questions. It's never a direct answer. For anybody, it's going to be a different answer. So how much do you need to sustain the sale? There's two lenses that we want to work through first. So first is going to be on the personal side to understand what is life going to look like. You're going from owning a company where all of your time is spent and all of your income comes from to a big old mystery box. Some business owners do a really good job and they're running to something and not from something. Others, they just simply want to get out. So the first item to understand how much you need is to know what you want to do. So that's where we go first. Second, once you know what you want to do and what it's going to cost and what your family dynamic's going to be, then we can start going into analysis. At that point, get the number, find the number. There is no specific set amount, no Googleable answer. It essentially comes down to what's your burn rate going to be in your own personal life.
Yeah, so to sum it up, maybe get to know the person, get to know the situation, and then start getting into more of the quantitative side later on. But I think to your point, there's not a magic number that everyone's
absolutely
looking for.
Yes.
The second question is, what steps should I, being the business owner, be taking now to prepare financially for a potential sale?
So if somebody's watching this video now, naturally they're probably engaged with you guys, and that's going to be one of the best first steps. You want a team surrounding you. When you're getting ready to either entertain the idea of selling a company, simply add value to your company and raise the EBITDA, or you're proactively pursuing an exit, you want to be able to first look towards your business. What is my team build out? What's my valuation versus best in class? How's my bookkeeping? Do I have key employees that are in proper place? Is my accountant good in being able to have a tight rein on anything so that if another business owner looks at it, is it actually going to be proper? Things that you cover and the accountants and investment bankers are going to be able to cover on that end. Then it kind of goes back to the first question of, where's your family dynamic? What is your current lifestyle at? What happens when you transition, if you want to? Things that you don't have to solve now, things that you just simply need to ask the question on to prepare yourself, because it comes quick once that document's signed. Lastly is most business owners have 80% of their finances tied within an illiquid company. What happens when that becomes liquid? Is there a plan in place? Because our world moves quickly. So being able to have at least an idea or an expert walking through what the tax implications are going to be and the best investment vehicles or structures are going to be moving forward, it's good to get a plan put in place. No action item needed at that time, just getting an idea.
Yeah, I like that. I mean, one of the reasons why we really like Mike and FFA is it's got to be a team. He's coming at it from the family, more personal lens to make sure that if we end up ultimately selling a business, they have enough to be able to live the life that they want to live. And also sometimes the response might be, now is not the right time to transition the business. So Mike and his team have been very good about being transparent and honest with us in that regard too. So the last question is, what will my financial picture look like after I sell the business?
It's going to look very different. When someone goes from a position of having complete and total control over their company, their income, if you want more revenue, you go work harder. If you want more time off, you expect less revenue to come in. All of that changes when your company sales. You go from being into control to handing over control to various alternative, either team members, advisors, or even on your own self-management, just less control in general. So one of the main things that you want to be able to look towards as you sell a company is having an understanding that you are giving up that control.
It's very well said. So big picture to sum it up, get engaged with a financial advisor, get engaged with an investment banker or mergers and acquisitions firm. It's never too late to plan. It's never too late to talk about your business. It's never too late to talk about your family. And hopefully when you surround yourself with a team, we can make good decisions for the future. Thanks for joining us. If you enjoy learning more about Calder Capital and our sell-side advisory practice, you can contact or find us on the details listed on the screen. We look forward to hearing from you soon.